if you're sitting at home right now and you're wondering what the hell you're going to do with your mortgage, well, first of all, I would not take a 5-year fixed rate.
What would you take then? If not a 5-year fix, like you take a fixed or a variable?
So I don't
like 2 and 3 year fixed are looking pretty good right now.
Yeah,
right?
I would. So I would say it would be dependent on a few things. Okay, so it's always dependent on time horizon. So how long are you planning on staying in the property or holding on to the property before selling it? Because if you are switching to a fixed product, especially right now when rates are high, and you want to break that mortgage when rates drop, you're going to have a problem. Interest rate differential penalties are going to be back in the market very soon, and they are extremely, extremely egregious, and the banks love them for that reason. So remember, interest rate differential penalty is the difference between the interest rate that you're paying on your mortgage and what the bank can get for a term matching the remaining maturity that your mortgage has. So if you take a 3-year fixed rate right now, and in 2 years you want to break it, they're going to compare your 3-year fixed rate, which is probably 5.5% to 6%, to whatever the 1-year rate is 2 years from now. And if that 1-year rate 2 years from now is 2 or 3%, you could get whacked with a massive, massive penalty. 2, 3, 4% of your loan amount. So I would say, number one, time horizon. Make sure you're not planning on selling it, or there's not a degree of a high degree of chance that you will be selling it in that term. And the next thing it's really important to look at is how much time do you have remaining on your mortgage? So if you have a variable rate mortgage that has, say, 2 years remaining on it, then I would probably look more to getting a 2-year fixed rate. But if you have a 5-year variable and it has 4 years left on it and you want to switch to a 2-year, you're going to have to pay a penalty to break the variable rate mortgage that you have right now, right? Like, back to mortgage basics, variable rate mortgages still have penalties. They just fluctuate with prime. Your penalty is 3 months worth of interest. And guess what? 3 months worth of interest is a lot right now, right? Prime rate's at 6.95.
Yep.
Yeah. On the way to 7.2% if we see another rate hike. So there's not a really short answer to this question, but I would say some degree of a fixed rate is probably a good idea, especially if you can get a 3-year at 5.5 right now. 2-year probably 5.75. That is 2-year at 5.75 is 120 basis points off of prime. Today's prime. And if prime goes up another 25 basis points, just add that to the delta between the two rates. So people that are at home wondering what they should do with rates right now on their mortgage should kind of consider a few different factors. But yeah, I mean, I think that the Bank of Canada and the central banks are going to overcorrect. I think that we're going to see at least one more rate hike. I hate even saying that. And as a result, that might make the rate cuts speedier, like when we start seeing more dramatic drops in CPI, that it could mean that, we'll see things change a little faster on the other way.